So our next question is PSB are currently dealing with difficult issues with no easy solution. But the current situation is also an opportunity to undertake reforms and strengthen state-run banks. Currently, critically analyze the recommendation of Standing Committee on Finance in this regard. PSB are currently dealing with difficult issue, so with no easy solutions. So answer. Our answer is so, as per recent report by CARE rating revealed that India has been at fifth rank with the list of countries having non-performing asset (NPA) with 9.9% ratio. The increased NPA and bad loans have put public banks in jeopardy, which is also affecting productive sectors of economy at all the levels. To stabilize the problem of rising NPA bad loans, Standing Committee on Finance headed by M. Virappa Moili has made crucial and important recommendations as mentioned below. Who mentioned? M. Virappa Moili has made crucial and important recommendation as mentioned below. First is relaxing the capital adequacy norms imposed by RBI, particularly for banks without international exposure and under the prompt corrective action framework. So, relaxing of capital adequacy norms imposed by RBI, particularly for banks without international exposure and under the prompt corrective action framework. RBI should consider separate treatment for NPA due to willful defaulters and external shocks like policy or judicial interventions, fixing a base price for bidding of assets under the bankruptcy process to avoid large haircuts. So fixing of base price for bidding of assets under the bankruptcy process to avoid large haircuts. Architecture and specialized long-term finance institution should be checked again since banks lack of resource base to engage in long-term finance projects. So architecture of specialized long-term finance institution should be checked again since banks there is lacks of resource base to engage in long-term finance projects. So committee has recommended to form high-powered committee to evaluate power and authority of RBI. And our others is pros and cons. So recommendation, pros and cons recommendation now is in pros. Relaxing norms of CAR will improve lending capacity. Will fill norms for of car will improve lending capacity of banks and generate high interest income. And other pros is prompt committee actions from willful defaulters and external shock would be good for getting back those money and induce into economy. And under three the under bankruptcy process, fixing price for bidding will help in floor pricing and will affect discovery of price and will affect discourage biddings. And specialized institution will evaluate the long-term project activity effectively. So here you can see in pros, relaxing norms of car will improve lending capacity of banks and generate high interest income, and prompt corrective actions from willful defaulters and external shock would be good for getting back those money and induce into economy. And under bankruptcy process, fixing price for bidding will help in floor pricing and will affect discovery of prices and will affect discourage biddings. And specialized institution will evaluate the long-term projects collect effectively. And cons are relaxing car and norms for weaker banks could be rising since could be acc- accum- accumulating more bad loans. Relaxing car norms for weaker banks could be risky since could be accum- accumulating more bad loans. It loans become bad due to willful defaulters or external shocks. There is no guarantee that bank will recover money holded for a long term. The task would be more tedious. It loans become bad due to willful defaults or external shocks. There is no guarantee that bank will recover money holded for a long term. The task would more tedious. High resolution system under bankruptcy is still at an early stage and dealing with a large number of cases as of now. The earlier experiments of long-term finance institution was failed. Hence, need to improve the regulations. The earlier experiments of long-term finance institution was failed, and hence need to improve the regulations. So it all are consequence. So conclusion: India is under menace of raising NPA and bad loans, which is long term will affect the economy badly, and government and RBI should work together to curb it as soon as possible. Credit checks and balance checks are required as per the recommendations of by Finance Committee. So we discuss all the things. So pros events in relaxing norms of car, so improve lending capacity and banks and generate high interest income and prompt corrective actions. Yet important under bankruptcy process, fixing price for bidding will be help for floor pricing, and a specialized institution will evaluate. And cons: relaxing car norms for weaker banks, and it affects now here, and if loans become bad due to the willful defaulters or external shocks, there is no guarantee. And third is that the resolution system under the bankruptcy is still an early stage and dealing with a large number of cases as of now. The earlier exemption experiments of the long-term finance institution was failed. So sorry. So now we discuss all the things, and I think it will be help to you for better understanding. And here, as for the report care, please remember, care rating revealed India has been fifth rank with a list of countries having the non-performing assets with 9.9% ratio. So here is relaxing the capital. Here is some of the recommendation like relaxing the capital adequacy norms imposed by RBI. And second is RBI should consider separate treatment for NPA due to willful defaulters, and fixing a base. Three, the fixing a base price, and three, four is architecture of specialized long-term finance institutions should be checked. And committee has recommended to form high-powered committee to evaluate power and authority of RBI. So thank you.